As Andrew mentioned, the Dow topping 28,000 for the first time ever on Friday. The S&P 500 and the NASDAQ also reaching all-time highs. Right now, for a look on what we can expect from the markets this week, let's welcome Krishna Memani. He is Invesco's Vice Chairman of Investments, also CNBC Senior Markets Commentator Mike Santoli. Krishna, thanks for being here. Mike, thank you. Mike, first of all, just set us up with 28,000, what this means, how important it is, and what momentum looks like from here.
I think the fact that it's a new high and it's confirmed by new highs in the other indexes and also strong rallies around the world hitting at least 52-week highs means that the market is in tune with this idea that it's sniffing out a revival in global activity. That's been the message of the markets. If you want to just look at what the markets are suggesting and infer that that's the outlook in the next several months, it is cyclicals doing better. It is the global picture is firmed up a little bit. So all that's on the come. And I think that the only risk in terms of the levels we're at is, the idea that we're still in around a 2% U.S. economy was a relief when we were expecting a recession in August at 2,900 on the S&P. If we get to 3,200 on the S&P, or let's say 30,000 on the Dow, 2% might not feel like it's a relief anymore. It's a little bit disappointing. I think that's the relationship we have to watch, but we're not quite there yet.
Krishna, you think that the middle of next year will be higher than where we are right now, and we're looking for new highs to continue to be set.
Absolutely. So I think it's the revival in global growth, but in addition to that, we have two other things helping the markets as well. One is the Fed on pause. They are not going to raise rates until they see persistent inflation and the expansion of their balance sheet. That is actually quite important as well. And secondly, or thirdly, the trade deal clearly helps in that regard. So I think the outlook for the markets is up. The question, as Mike points out, is how much higher from here we can go. And I think overall the expectations have to be somewhat muted. It's positive, but it is not going to be as good as 2019 was for the very simple reason that it's reasonably fully priced at the moment.
We heard the headlines about what the Chinese are saying over the weekend with these trade talks and what's happened. You also think that really we don't need much to happen in a trade deal. We just need to not exacerbate the situation.
I think that, again, is a very important thing. That is, the impact of the trade is in the baseline right now. So as long as things don't get far worse than where we are today, that's all we need, because there's enough revival in the global economy to support that, and the fact that central bank balance sheets and policies far more accommodative helps in that regard.
Mike, it hasn't seemed like the headlines have moved the markets as much with trade anymore. No. Maybe you see 60 points here, maybe 80 points there, but you don't even see triple-digit moves for the Dow when there's new headlines.
Yeah, obviously, the effect wears off the more times you get these kind of relatively vague directional reports. But I also think, to Krishna's point, we got a de-escalation of the trade wars where you stopped kind of adding new threats. That's in the premise right now. And I think unless you challenge that premise, you're fine.
By putting on new tariffs.
That's challengeable.
And if you don't get the new tariffs in December.
Don't you think it's asymmetric, though? I don't think the upside's much on if we get a phase one.
Why.
But if they said, all right, forget it, we're going back to tariffs, then I think you could get your triple digits.
I think all of these things are asymmetric. Any of these types of things that are total surprises for the market, I think is the impact is going to be asymmetric, especially when you are at all-time highs.
Look, if you look at every peak in the market since January of 2018, they were a new high, and then they coincided with some kind of exacerbation of the trade frictions.
That's not really an argument for putting a lot of money to work right now, though, Krishna.
Well, no, I think the argument for putting a lot of money to work right now is the fact that the global economy is coming out. And I think, therefore, the question is, where do you put the money? That is far more important than how much money you put in the market. And I think the growth differential or the improvement in growth is probably going to be more overseas than it is going to be in the U.S. because overseas, the performance in 2018, 2019 was far worse. So I think that's where the most attractive part of the global economy is.
Krishna, we're up, 90% through earnings seasons yet? And all those recessions didn't happen. All those worries. Are we now saying there's not going to be a recession anytime next year or two?
Well, no, I don't think so. I'm on the record for saying in 2018 that we have 5 more years on the cycle. The key point here is as long as we don't have inflation, the central banks have a lot of flexibility to manufacture outcomes by easing policies very aggressively. And that's clearly what has happened. Once the Fed pivoted early part of 2019, we will see the follow-through effect of that over the next few quarters.